What's up, it's Ron, and in this video we are talking about one of the best day trading indicators that you can use whether it's crypto or any other markets. I find it to be the least talked about indicator of them all, which is kind of crazy because it's one of the indicators that I look at before entering a trade, and it's used by some of the best traders that I know, and that's volume profile. By the end of this video, you will know what it is, why you need it, how you can add it and use it, and how to apply it to your trades moving forward. The volume profile indicator shows you where the trading activity has happened the most at different price levels, not just over time. Instead of looking at the traditional volume day by day, like the normal volume bars that you see on the chart, volume profile shows you how much volume was traded at each price. This really helps you understand where the buyers and sellers are most interested. And crypto markets are super volatile, so knowing where the big players are in trading kind of gives you an edge. Make sure to watch this video all the way through because volume profile will help you spot support and resistance zones, find your high probability entries and exits, avoid buying into weak price areas, and identify likely reversals or consolidation zones. Quick disclaimer, this isn't financial advice, so always do your own research. And hey, if you appreciate insights like this, please hit that like button. It really helps push this video to beginners trying to learn how to trade crypto, and it'll help you boy out and is much appreciated. Let's get into it. Let's go ahead and look at the four main parts of the volume profile, and after that we will apply it to our trading and see how we can use it to make better trading decisions. The volume profile indicator is essential for both day and swing trading because it shows where most of the buying and selling has occurred at these different price levels, revealing some powerful areas of interest on the chart. Now, these aren't just lines on the chart, they actually reflect real trading activity and the psychology of the market participants, making it a critical zone for making smart entry, exits, and your stop loss decisions. I want to show you this illustration first so you know how the indicator is broken down. So the volume profile indicator will highlight 70% of where most of the trading activity has taken place, and that's in this zone right here. So all of these nodes, and anything above or below represents 15%, which is extreme values of the market profiles and the volume of all the contracts executed in this area. So low, these are low volume, this is high volume, this is low volume, this is 15%, 15%, and this is 70%. And the indicator is going to look something like this. Let's start with the most important part of the indicator is this POC line. Now, again, we're going to look at this live here in TradingView in just a moment, but it's important to understand what you're looking at. The POC is a point of control, and this is the price level with the highest trading volume, and it almost acts like a magnet because it represents where the market found the most agreements, the handshake agreement between a buyer and a seller. So price often returns to this point, making it a key level for the reversals and consolidation. So you'll often see a lot of choppy movements around this POC line. Then you have the value area high. This marks the upper boundary of the value area where 70% of the total volume took place. This typically acts as resistance since traders see it as the expensive zone. Price tends to stall or reverse here at the value high unless there's a strong momentum to push higher. Then you have this value area low. The value area low forms the lower boundary of the value area, usually acts as support. Now this is where buyers consider it cheap and they may step in to push this price higher. When price moves outside of this value area, either above the value high or below the value low, it signals that traders are testing whether new value zones will form or if price will return back to balance. And then you have these nodes. You have high volume nodes and low volume nodes. High volume nodes is price levels of lots of trading. So you see this where the POC is. And low volume nodes is areas with very little trading and price can move quickly through these zones. So for example, right here, right there, these are low value nodes. And what makes this tool so powerful is when you see some of these low value nodes, sometimes you can catch a fast move because price typically moves quickly through these zones. A quick recap and we'll jump into the chart. POC, this is a price level where the most volume is traded right here. Think of it as a magnet of the chart where price often returns, and use this to spot high interest zones where price might bounce or stall. The value area high, remember this is a top of the range, 70% of the volume. This is a top of the 70%. It acts as resistance. Price often struggles to break above this level without strong momentum. Then you have the value area low. Again, this is the bottom of the 70% level. This is where price tends to slow down. This acts as support. And if price drops below the value area low, then it may fall further or bounce if buyers step in. All right, let's go ahead and jump into the chart. Right now we're looking at Bitcoin in TradingView on the daily chart. And so what I did now is I come over here, I scroll down to fixed range volume profile. I go ahead and select that. Now you kind of look for a range where you want to see the volume and maybe where the most activity and or handshakes have happened. And so what I typically do is you can draw it from here to here, or really wherever you feel like you want to check for the type of volume that's happened. But let's, for the sake of this example, draw from here to here. All right, so we see that the POCs right here, value area high, value area low. Above it is the 15% of the least trading volume, and same with below it. Now let's take a look at the price movement. So we can see that it wants to work within this range. We notice a lot of wicks that come and touch the value area low in reverse. We notice a lot of choppy action happening where the magnet or the POC is, and then we see reversals happening at the value area high. Now you do have these candles that break through, sellers take control, comes back, becomes slightly bearish. So here you can actually see the volume profile doing its job, doing what we expect it to do. Let's try another example. Typically I just look for when I see consolidation start happening, and we can kind of see it working. We see that this value area high is acting as resistance and it's reversing. We can see some choppiness happen at the POC, and then we can see the value area low acting as support here in some of the areas. Right here, sellers to control, and then it continued. Go ahead and let's try it on the 15-minute. All right, so here, right now we're on the 15-minute chart. We added it simply by selecting this and drawing it from this candle where I kind of see it doing a pullback to about right here. I want to see what it might do next. And so we kind of see it doing something similar, a little bit of choppiness here by the POC. It acts as resistance on all these candles, dips back down, breaks through resistance, comes back, retests, gets a little choppy, comes back here, and then it tests support. And then it goes back, breaks through, ultimately wanting to come back to the POC, but we had some bullish action happen right here. Today is very, very bullish. Bitcoin is about to break over 100,000, and I would not add a volume profile in this range. We're looking for a new range to add volume profile in. So this could be the new range. And so this gives you an idea that the most volume traded was actually right here. So most likely we're going to see this current candle come back down to 99,303 and maybe retest support. But today is super bullish, so we're really not sure. I'll keep my stop losses super tight. If we break 100, we might end up going to 105, 106. And overall, I like using this method of checking for volume activity versus the traditional up and down bars. Make sure you open up TradingView and start practicing with the volume profile. Scroll back to the charts, add volume profile indicator, and just watch how price interacts with high volume nodes and low volume nodes. Mark the key areas like where price stalls at the high volume nodes or cuts clean through those low volume nodes. You'll start to notice some patterns. Volume profile gives me incredible insight on where that real buying and selling is happening. It helps me spot those areas of value, potential reversals, and really some strong breakouts as well. And when I combine volume profile with the other trading indicators like we talked about in this series, like moving averages, support and resistance, MACD, Fibonacci, and RSI, that's when everything starts to click. No more random entries, just clean, high probability setups. So if you're serious about making money in crypto, hit that subscribe button, turn those notifications on, and I'll see you in the next one.